Good morning and watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. The country likely remained in recession in the first quarter as the government continues to struggle in containing the pandemic. That's according to economists. ING Bank said the economy may have slumped by 3.5% from January to March on the back of sluggish consumption. Meanwhile, ANZ research said Philippine GDP likely contracted by 3.7% in the first quarter, saying exports have not yet fully recovered and fiscal support remains volatile. ANZ also said the surge in cases and stricter quarantine restrictions in Metro Manila and nearby provinces weighed on consumer and business sentiment. The economy declined by 9.6% in 2020, following a contraction of 11.6% in the third quarter and 8.3% in the fourth quarter. With this, ANZ has downgraded its growth projection for 2021 to 4.8% from its initial outlook of 7.1%. The Institute of International Finance has joined ANZ and other institutions in slashing the GDP outlook for the Philippines. The IIF now sees a growth rate of 6.5%. That's down from its earlier projection of 7.2%. It is also attributing the downgrade to renewed lockdowns, a slow vaccination rollout, and the rising infections. Both the ADB and World Bank have earlier cut their growth projections for the country. That's primarily due to the same reasons. The government expects the economy to grow by 6.5% to 7.5% this year, but economic managers earlier said they would revisit this target following the reimposition of stricter quarantine measures. Now, exports increased 31.6% in March. That's outpacing imports, which also grew year on year to the tune of 16.6%. You can see on my screen here, export sales rose much more than the 11.5% expected by economists for the month. The same goes for import, as economists only expected a single-digit growth of about 6 to 7%. In effect, the trade deficit narrowed to about $2.41 billion from a revised $2.71 billion in February and $2.72 billion in March of 2020. Year-to-date total exports amounted to $17.5 billion US dollars, at 7.6% higher from the same period of last year. Meanwhile, imports from January to March 2021 clocked in at $25.5 billion, 3.2% higher from year-ago figures. Okay, guys, it's the last trading day of the week, and of course, we're hoping for a recovery from yesterday's dip to a fresh year low. We are at 6,200 levels still. Nonetheless, you can see a bit of a recovery at the open. That is up by 0.04%, so generally still flat. Now, recall that yesterday, ABCAP had said it was really the last-minute buying that cut those losses, and Luis Lamling of Regina Cap said that investors packed their shares here in the Philippines and jumped on the U.S. bandwagon, wherein the Dow posted a record high yesterday. But some of those who are watching, of course, the vaccine saga may have some cause for optimism, at least for the last trading day of the week. 1.5 million more Sinovac doses have just arrived in the Philippines as of 8 a.m. this morning via a Cebu Pacific flight in NAIA Terminal 2. Now, recall that they have mentioned that next month they're expecting additional Sinovac vaccines up to 4.5 million doses to be arriving. Apart from that, tomorrow we are expecting the arrival of 2 million AstraZeneca doses care of the COVAX facility. And you've also got on May 11, so by next week, 150,000 Pfizer, which of course hoping to increase that by to 1.1 million doses by the end of June. We are also, of course, negotiating for 2 million more doses of the Malaya vaccine Sputnik 5, that is, of course, from Russia. And of course, meron pa 500,000 hopefully of Sinovac to be arriving this May. So quite a lot of eyes here on whether these arrivals will be pushing through. Now let's move on to some specific earnings we need to break this morning. Globe Telecom's first quarter net income at 7.3 billion pesos. That's up 11% year on year. That is on the back of quite strong home broadband revenue. So you can see that on your screens here. Service revenue rising 3% to 37.8 billion pesos. But what is really interesting is the data revenues that accounted for close to 8% Of course, more data connectivity demands people working from home. This is what they mentioned. E-commerce, entertainment, and even the students learning online. Another thing very interesting here, mobile business that was up by 1% from fourth quarter 2020, but still year on year, of course, we are limited to in terms of mobility. That was lagging 2%. But again, home broadband saving the day, those revenues rose 27%. They have hit a record 7.4 billion pesos subscribers, reaching the 4 million mark. Globe Telecom up by 0.6%. Now let's move on to San Miguel Corporation. Now, we had reported some of the earnings of their other subsidiaries already, but nevertheless, for the conglomerate in the first quarter, their net income surged by more than 15 times to the tune of 17.2 billion pesos. Instead, they have seen a recovery across oil, food, and the power units. We recall that we had already reported Petron has swung to a profit. They will be resuming refining in June, but even there are other areas here, for instance, the power sector, that was up by 141%. The infrastructure, however, was down by 33%. Nevertheless, Ramon Ang saying that they are encouraged by these improvements. They reflect that their businesses are definitely headed towards a full recovery. And finally, just one more to break here, ICTSI, that net income was up in the first quarter by 51% year on year. That's on the back of revenues up by 16% to $435.6 million. This according to Chairman and President Ricky Razon. They have seen improvements in most of their terminals as the economies continue to recover their pandemic, particularly strong volumes across Asia, America, Europe, Middle East, and Africa. Let's check in on the biggest headlines we're keeping our eyes on. Government agencies raise the possibility of regulatory overlap in the creation of new office tasked with ensuring power rates for consumers. Now, in the House hearing on Thursday, the National Electrification Administration said that both House Bill 7608 and 8786 would strip away some of its functions. This as the proposal seeks to create the Energy Council Office or the Energy Advocacy Office, respectively. NEA claimed that the EAO or ECO would be empowered to initiate, intervene, and represent energy consumers, which supposedly fall within the jurisdiction of the NEA Administrative Committee. The agency added that the new office will only add further obstacles to resolving issues that affect consumers. The Energy Regulatory Commission and other entities created under EPIRA may also be affected. Now, agricultural group SINAG says the government's decision to moderate the pork tariff reductions under EO 128 represents a, quote, moral victory for the local hog raisers. This is as the Senate and the economic team agreed to increase pork tariff rates to 10 to 15% versus the 5 to 10% from the original proposal. The group adds that the Customs Bureau must be alerted about this development and be guided on the tariffs that should be collected once the imports arrive. Now, for the Meat Importers and Traders Association, the proposed amendments to the executive order are still manageable, but it will result in a corresponding adjustment in retail prices at a higher price point. Now, here to discuss whether or not this was the best compromise, we have with us Asec Noel Reyes of the Department of Agriculture. Good morning, Asec, and welcome back.
Good morning, Danie, and to our viewers. Good morning.
Sir, from the 30 to 40% tariffs, we're between 10 to 25% now, which is still nevertheless higher than what you had been proposing. Your comments on this, why did you agree to this compromise between the economic team and the Senate?
Yeah, it was a recommendation of the Department of Agriculture that was given to NEDA and, of course, the Senate. So it's a good compromise. It's a win-win situation for both parties. And the matter is now with NEDA through Secretary Carl Chua, and the NEDA board will convene and go over this recommendation and thereafter approve it and endorse it to the Office of the President to revise EO 128.
Sir, when do you expect this to be approved?
Depends. According to latest reports, it will be facilitated within next week, probably.
Okay, by next week. Sir, how much do we stand to lose in tariff revenues if this is now going to be approved?
No, we're not looking at that. We're looking at the benefits of our consumers to give with the reduction in prices for pork prices in the country right now, especially in Metro Manila. So it's hovering above in near 400 pesos when it should be about 350 or lower, for fresh. And then for imported pork, we're looking at about 250 to 270 up to 300. So again, this will we're down to about 6 to 8 billion worth of savings on the part of consumers instead
Sir,
of the revenue loss.
okay, sir, the April inflation figure still did not reflect the lowered the pork prices, and it's
Yes.
still above the target. When do you expect this to start kicking in?
Uh, to start to kick in as soon as imports come in, of course, and the new imports will come in about in 30 to 45 days, and for those permits allowed under EO 128, they are coming in already. So again, we'll see a softening of prices in supermarkets at least and groceries and some public markets where they have freezers and chillers.
Sir, but with the domestic supply improving, as you had mentioned in our last interview, of course, you're trying to arrest the ASF and also improve the hog supply. Why is this not having an impact yet on the prices in April, sir?
As you know, Danny, it takes a while to repopulate, no? To introduce piglets in ASF-free provinces, areas. So, and basically, it takes about 6 months, 4 to 6 months to grow piglets into 90 to 100 kilos. No? So again, it will take some time we need to recover 3 million hogs that were lost a year ago from a high of 12.7 million in 2020, and now it's down to 9.7 million. So we lost about 3 million hogs. So again, we have to recover those 3 million, and uh, industry sources and government estimates, we estimate that it will take about 2 to 3 years to regain the 3 million additional population.
Okay, sir, but the tariffs lowering will just be for 1 year. Will that
Yes.
be adequate if you mentioned that it still takes 2 to 3 years to make the domestic supply adequate?
Well, we believe so. We believe so, Danny. So again, because imports will come in on the out quota, no? Importers willing to order some more, they can do so at a higher tariff. Okay, so again, they'll see the cost structure. If the prices will be competitive, they'll surely they will import. So again, that's the challenge there.
Sir, will there not be a threat to the local hog raisers to stop producing if the imports are cheaper than basically producing pork?
No naman, uh, Danny, we're looking at this at about 20% of our supply. No? So again, it won't, uh, it, as they say, it won't give a damage to, it won't damage the local industry because it will only be about 20% of our supply. So again, there's no cause for alarm. In fact, uh, racers in Visayas and Mindanao are upbeat and they're increasing their production. And we're pouring in a lot of money through the financial institutions. As you may have heard, Land Bank is pouring in 30 billion for lending to commercial racers, and Development Bank of the Philippines is pouring in another 12 billion for commercial hog racers in these areas, in these ASF-free areas.
Sir, you mentioned as well separately that the status or the DAS mentioned that the status of the pork supply, at least in Metro Manila, is adequate. How long is that going to be adequate supply without the imports kicking in?
No, we're not saying it's adequate. So we will be importing to
Will be
uncover
okay.
supply shortage. There's Definitely there's a supply shortage, so we're augmenting this with supply from imports, and also hogs coming in from Visayas and Mindanao into NCR Plus.
Okay. And finally, sir, just a quick update. Very interesting in the news here on trials. So apart from the vaccine trials of the ASF, you are looking at ivermectin. Give us a deal on that. A lot of contention surrounding the usage of this drug when it comes to COVID-19 protection or cure even. What is going on here, and when do you expect these trials to have any clear results?
First, there are two things here, Danny. First, we have an ASF vaccine trial. Okay, a U.S. pharmaceutical company in partnership with Zoetis, a global animal health company, and partnership with the DA and commercial farms, uh, is introducing a vaccine developed by the U.S. pharmaceutical company. So they're engaging in vaccine trials now in 10 commercial farms. Okay, and then there's another issue. The secretary has formed a research team composed of the Bureau of Animal Industry and other livestock agencies and academia to look into ivermectin and other biological agents that can be used to control and prevent ASF. So that's the picture there. So again, they're looking into it if ivermectin is a possible cure or prevention against ASF, and there's the other one, the bigger one, which is the vaccine that's being tried right now in 10 commercial farms.
Sir, do you have a timeline on the results of that?
For the vaccine trials, they have 3 months to do it, and by midway we'll issue a statement if these are giving favorable results. And for the ivermectin, the research team will be formed, and thereafter they'll conduct a clinical test and laboratory test.
Okay,
Likewise.
so hopefully within the first half of this year, we will have some preliminary results available on these trials. Thank you so much for that update. That was Asec Noel Reyes of the Department of Agriculture.
Thank you, Danny. On behalf of Secretary William Dar, Department of Agriculture, this is Asec Noel Reyes again. Thank you, and good morning.
And that's the first look into the business day. Today is Friday, May 7, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe. Philippines, we are One News.